Welcome back, everyone, to another episode of the Financial Dad Podcast. It is Bridget and my dad, Tim, here, who is the financial dad. We have an interesting topic today and one that I know I've struggled with. And if you are an entrepreneur, a creative, a freelancer, you've probably also had this come on your radar, which is how do we manage and organize our cash flow as an entrepreneur, as a creative, as an independent contractor, when that might vary, or you might get varying multiple sources of income. I remember there was a time where I had like 5 different places I was teaching yoga. It was hard to organize. So we're going to have a little conversation about really where to start when it comes to managing and organizing the cash and the money that's coming into your business.
I think it would be good to start a little bit about some of the early steps of starting a business, understanding things like what kind of records should you be keeping and what things matter from a financial standpoint, an accounting standpoint, a tax standpoint.
I also think with social media these days, and a lot of people who are going to listen to the show were inspired to start a business of some sort because of social media. Social media does not go into all the things that you need, like what you just said, all of those things, reports, record keeping. I don't think that's where people are putting their brain. They're just thinking, ooh, money, creativity, social media, ideas. So yeah, let's go into the nitty gritty. I think that's a great idea.
When you start a business, one of the earliest conversations you should have, and many people don't, and many people may be down the road already about this, but one of the things you should have is a conversation with an accountant, somebody who's going to do tax returns for you, for example. And there'd be a couple of things you would talk about. One would be, what kind of records should you be keeping in case you ever have to go through an audit by taxing authorities, the IRS or a state, for example. So you want to know what kind of paper trail, what kind of, items you're supposed to have that will make it possible for you to file your tax returns on a timely basis as well as accurately, and that you can defend your tax return. So every accountant will be able to give you that kind of advice. One of the things that an accountant also will give you, and sometimes you need an accountant that is specific to, for example, an industry. Hallie, as an actress, the question becomes, what are legitimate expenses that can be used as an income tax deduction for your particular business? So as an example, for an actor, if they purchase clothing that is not for street use, it's just for audition purposes, for example, they can take a tax deduction for that. If they improve their appearance, like they get their teeth capped or whitened or, some of those kinds of things, they can take a tax deduction for those kinds of things. If you start working out of your home, doing what we're doing here today, podcasting or making reels, then certain expenses from your home might be income tax deductible, like the cost of your internet. You may be able to make a tax deduction of that and
I think
have
it's
it
like
be
a certain percentage if you're a home business.
Yeah, when you're a home business, you sort of take the square footage of the house and the square footage of your office and divide the two. And that percentage is applied to things like utilities of the home, things like that. An accountant, though, is the person that you would talk to who would be able to tell you for what you're going to do, how you're going to do it, et cetera. Here are the things that you're going to be able to take as tax deductions and what then keeping the record of those things. Okay. So you want to start the business with an understanding of what's going to be an expense of the business for cash flow planning purposes and what is not going to be an expense of the business. So, if you buy food every day, your groceries, well, that's not an expense of the business because you eat. Now, if you eat while you're talking to a business contact and you're pitching something or, discussing a project or something like that, then that can become a partial tax deduction for you. Yeah. So something like that, again, you would keep track of and keep receipts for, et cetera. So the accountant will give you the breadth of what sorts of things would be legitimate expenses of your business. And I would say that the next step for you would be to make an Excel spreadsheet. And on the top of it, you would have, here's what I think I can generate in income. And let's say put out 12 months, January, February, March, April, May, June, July, August, etc. Put that out going across the top. And then down the left-hand part, you would have what you think you will generate in what kind of income for each month. Now, this is where in a startup business, it's the most unlikely that you'll be accurate because the revenue always comes slower and expenses always come faster than you expect in a new business.
I have some funny spreadsheets when I first started yoga transitioning into health coaching of this exact thing. And my revenue projections or whatever I thought was possible was cool to think about. But in actuality, I didn't quite reach those things, which like that should be another part of this conversation too, because it's like, you don't even know what you don't know. You might have a goal, but yeah, what if you're not hitting that? But then you have all these fixed expenses that you're paying for now on a monthly basis.
Right. Well, let me come back to that because the answer to that is you shouldn't start a business without some sort of a cash cushion. Some sort of money saved, some amount of money saved that you can use to pay business and personal expenses when the revenues aren't there. So just so you know, in a big picture context, the number one reason that businesses fail is that they don't have enough capital to sustain themselves through periods of higher expenses, lower revenues, or both. And the beginning of all businesses is usually, for most businesses, it's a period of lower revenue than expected and higher expenses than expected. So when you create a spreadsheet, and this is just a startup exercise, just to get a feeling for what you think is going to happen, you would start by putting revenue numbers across at the top, and then you would start putting expenses, and you would total up those revenue numbers. So, in your case, you might have yoga and book publishing and, other items. When do you think revenue will come from them, et cetera, in the various months? And then you would total that up. And below that, you would start listing expenses, what you expect to have in expenses. So personnel, virtual assistant or someone that's assisting you or an independent contractor that you're going to hire to do something. Development costs, like for websites or for programs that you're going to use, whatever it might be. Or if you're going to be traveling around selling or doing something.
Emails. Yeah, software and systems, I think, are probably things that most people listening to this show will have. They might not have a brick and mortar overhead because there is so much availability online, especially if you're some sort of creative, but it's likely going to be some sort of online expense software that's a recurring price also. A lot of these softwares are recurring. It's going to be a monthly thing to make sure that you have the money for.
Yeah, the software companies have kind of woken up that somebody paying upfront for something and getting it for life isn't to their advantage.
Oh, so that's how it used to be.
Yeah. Well, yeah. Believe me, when I started, well, first of all, there was barely any software when I started in business because it was the Stone Age by comparison to where we are today. You paid $300 for a software and maybe you got 5 years licensing for it or something like that. Today, it's $50 a month in perpetuity. You just forever, you have to plan on spending that. Okay, so back to then the spreadsheet. All those various kinds of expenses that you anticipate having, whether it's car related or software related or utility related, whatever it might be, you would then list those down the left-hand side of the spreadsheet and total them up. Then what you would do is take the income number for each month and subtract the expense number for each month from that. And that would give you what we would vaguely call net profit, a projection of what you're going to have for the month. If it's a positive number, then you made money for the month. If it's a negative number, you lost money for the month, or you're going to lose money for the month. If you're being very conservative about it and you start saying, well, I'm going to put in a fudge factor of 20% for expenses that I'm not even thinking of today that will probably come. And I'm going to shift revenue out by 3 months for everything because it never comes as fast as I think it'll come today. You're going to end up with months of non-profitability, right? You're going to have negative numbers. And by the way, ideally, you also put in there, if this is your whole livelihood and you have no other source of income that is paying your home bills, and keeping you sustain in life otherwise. One of the expenses you need to put in is I need $3,000 or $4,000 a month to live on, just to pay rent, pay for a car, pay for food, pay for utilities, have a little money so I can go to set aside for vacation or gifts or holidays or,
And taxes, just like we did in the first episode.
Well, here's the thing. I mean, yeah, right. But I mean, for the most part, we're figuring we're not going to make a profit the first year. So you may not have taxes. This would be a reason not to assume a $3,000 or $4,000 a month number at all, because if you assume that's an expense, but you're not taking it as an actual salary, doing payroll, withholding payroll taxes and sending them off to various governmental entities. And all, if you're just kind of saying, I know I'll need to dip in and take $3,000 a month to live on, that's not a real business expense at that point. It would be considered from a tax standpoint as a distribution of the principal of your investment back out to you, as if you just took it from savings. So
that makes sense.
If you're not paying yourself a salary and running a payroll thing, and again, sending off FICA taxes, to one place, and federal and state and unemployment taxes or disability taxes or Medicare tax, if you're not paying all of that out, then it's not really a business expense from a tax perspective. And it would be better to plan this from a tax perspective. So you could look at it just as a sheer cash flow need, or you can look at it from an income tax perspective. Do it either way. What you could also do is take that net profit number for each month. Don't include an expense of, again, $3,000 a month that you just need for living expenses. Don't include it yet, and now include it. Now put a line below that net profit number of how much money you need per month just to live on. And the net profit number will be more of a projection of profitability from a tax perspective. But when you subtract your monthly need for living from that net profit number, you'll get a real cash flow number. This is the number you need for cash flow. And if you add up that cash flow, what is largely going to be a deficit for the first year, that will show you really how much money you probably need to have on hand just to start the year.
So can we, let's break this down a little bit, because we're talking a lot of numbers and like visuals of the spreadsheet.
Concepts, yeah.
I want to talk about this cash flow idea. So let me try to reflect it back, and then you can tell me if I'm hitting the nail on the head or not. So we have our profit and loss statement just directly in, an Excel spreadsheet to start things off. We're going to write.
It's not a statement. It's a projection.
Okay. Projection. Correct. Because we're just like looking at.
A statement would always be what happened already in the past.
Okay.
Profit and loss statement, but a projection would be what you think might happen going forward.
So January, I'm like, okay, I think $10,000 is going to come in. I think my expenses are going to be something around $3,000, leaving $7,000 in profit. But then beyond that, I know I need $3,000 to live. So is cash flow then $4,000, whatever the difference is?
So your cash flow is positive by $4,000.
Okay. No. And that's what's going to continue floating like in that account per se. And that's going to keep the business going for expenses. Okay. This actually makes sense. And one thing I would also recommend to anyone listening is something that I'm glad I did early on, have a business bank account where everything is separate and not with your personal, because it doesn't really cost anything to open up another account, but it's going to be way easier for record keeping. I have found personally, this is so helpful to have it separated from your personal money.
So if you are, for example, an LLC, you're going to want to have an actual bank account, a business bank account for the LLC. If you are just a 1099 independent contractor and you don't have any corporate entity or LLC type entity, then you are what's called a sole proprietor. What you want is a bank account that, it might say something like Timothy L. Smith, and then the next line might read DBA, which stands for Doing Business As, DBA, Visibility on Purpose, something like that. And what you've done with that is you've created an account that has a separate existence from your personal expenditure account. And that account is where you would put all your revenue checks. Any kind of revenue gets deposited to that account, and all expenses are paid from that account. And you really simplify everything if you do it this way, to your point. But also, if you ever go through an IRS audit, if you commingled all your personal account with your business account, then when the IRS audits you, they'll have the right to look at all your personal business expenses and to see what you're spending. And it's just none of their business. And it's unprofessional, quite frankly. You'll look a lot better if you ever have an IRS audit, if you have a separate account where the business revenues are deposited and expenses are paid from.
That makes sense.
You totally want to have a separate account.
And even I remember the other thing I did early on was have a separate credit card solely for the business expenses and purposes, just again for like ease of record keeping that attached to that business bank account. So it was always separate from, my personal Chase card. And I think that makes it easy as well for someone.
Yeah. I mean, so for example, if you go to buy a business computer or a business printer, use that card for that. If you take someone out to lunch that you hope can help you network or grow your network or can help you in business somehow, use that credit card to pay for the luncheon. And then this way you're keeping everything separated. And again, from both a record keeping and let's call it a regulatory standpoint, an audit standpoint, you're in a lot better place if you've done it that way, if you've kept everything separated that way.
That makes sense. So one of the other things that I wanted to hit on, which we kind of already did, is if you are making money from you're a freelancer, independent contractor, a consultant, and you make money from a lot of different places. So what I'm hearing from the conversation is it's okay that you're making money from all the different places. Just make sure for record keeping purposes, it's going into the same, income bank account, and that in your Excel spreadsheet, if that's what you're starting off with, to actually categorize or have everything coming into one spreadsheet. Is that how you would do it if you're a sole proprietor and you're making money with different sources?
Yes, because what you would do is on the income side at the top, you might have one line of it that's just for, again, yoga revenue, right? And you might have another line that's just for publishing revenue. And another one that's, if you're Tim Smith, it might be singing revenue, so, something like that. So that way you can also track separately how much revenue you're doing in each of your buckets, if you want to call it that, of how you make money. You could even break it down, by yoga studio if you want to. So you can see, okay, how much did I make from which studio? Or again, we're talking about projections now. So you could do a projection of it. We do have to shift from the projection to now the actual accounting and the profit and loss statement that you would generate both, on a monthly basis typically, as well as for the year so that the accounting for taxes can be done. Do you mind if we jump to that? Is that okay? Or
yeah, I think that makes a lot of sense. So for a business, when they'd start out, you'd always want them to go to an accountant, sit down, figure out what are the taxable expenses or what are the deductions that would make sense for that specific industry. Then you would look at creating some sort of spreadsheet of just the projections of what you think you'll need to make or will make, and then your expenses. And now we're talking about the actuality of the situation.
Right. So, and again, that projection, you're hopeful that you hit all your numbers correctly and you want to manage to that or better. So then eventually, you have a month where you have operated the business, where you've done some work. Hopefully you've generated some revenue from some work and you have incurred expenses in doing that. And so now you have not a dilemma, but there's a decision to be made, and it should also be made early on, as to how you're going to track what you actually spent, what you actually generated in revenue during each time period. And that gets entered into something, some system, some way of doing it, so that you can now see going backwards, how are you doing? And you can compare it to the projection that you made and say, okay, I didn't do as much revenue as I thought, or I had more in expenses than I thought. And by the way, each time you have more, expenses that you hadn't thought of before, it makes sense to go back to that first spreadsheet and enter that into it so that going forward, you're putting that into your thinking. Oh my gosh, I've got this expense that I hadn't even thought about. I need, in my projections, in my planning, I need to be sure that that is included in it going forward. Now, To track these expenses, there are softwares for it, and there are also, of course, spreadsheets for it. Like you can just track it in a spreadsheet if you want to do it that way. The beauty of using a software for it is that usually the software will be tied to your checking account and your bank account. In these days, it can all be tied together so that the deposits automatically populate the system, and checks and what the check is for as an expense category automatically populates the system. And if you do that, then afterwards, you should have very little to do when the month is over to know where you stand, and very few adjustments to be made because everything was encompassed within the system. So I strongly recommend to people that they get a software for accounting, backwards looking accounting, rather than using spreadsheets. There's one additional benefit of the softwares, and that is that once you have the accounting done for a month, you can then produce reports, and those reports tell you a lot about the status of the business, where you are with the business and how it's going. The simplest report that you're going to be looking at every month is what we were talking about earlier, a profit and loss statement. And the very reason that I suggested putting income items at the top of a spreadsheet for projections and expenses down below is that that's how a profit and loss statement looks. It always starts with, here were the income items and a total, and then here were the expense items, a total, and a net profit at the bottom.
Yep.
The net profit should impact or should work out with, in effect, your bank account. Meaning, if you started the month with $7,000 in the bank, you had a cash profit of $3,400. Your bank account should now say $10,400.
Yeah.
And if it doesn't say that, you've got to figure out, in a process called reconciliation, you have to figure out why it doesn't say that, just to make sure that you're keeping your records correct all the time.
It's interesting because I'm a person who tries everything. I have a lot of experience in a lot of things because I'll try it all. So I've done the Excel spreadsheets that can absolutely work, especially if it's like a very simple, when you likely a lot of people listening to this, it might be you're out of college and you're starting as some sort of freelancer. Maybe you're a videographer for like a company and you're getting 1099 payments and you have just expenses and profit, and it's very simple to put into a spreadsheet. So maybe that's where you start. I also have paid for apps like QuickBooks. And one thing I will say that's nice about QuickBooks as well is, it's a decent chunk. I think it's about $600 a year. But if you break that down per month, that's not bad at all. But what it can do is categorize for you, and you can also get your accountant on board. So I tied my accountant in to that so that when it came time for, the yearly, me even pay quarterly taxes, so they could tell me exactly how much to pay. And then when it came time, to do our final taxes at the end of the year, they saw everything going on. So I just think it does give you that next level of protection, that it's not just you doing this, you have the support of someone else who is helping you with that. Now, I was paying a bookkeeper basically monthly to reconcile everything for me and give me those numbers, which was helpful. But again, it's an additional expense. We will have some links at the bottom of the show. So we'll have links to apps like QuickBooks, which we talked about, Wave, which is a free accounting software. There's also Xero. So we'll have links below if you want to check any of them out. But there's lots of options. You could start at $0 and work your way up, whatever works for you.
I've used QuickBooks extensively. I've used some other softwares extensively. I now can read financial statements and balance sheets and these, various reports. I've been reading them for decades at this point, so I understand them very well. At first, someone really just needs to understand a profit and loss statement. Most people are very comfortable with the concept of, revenue minus expenses, and there's something left, hopefully, at the end of the month. So a net amount. The word net is used a lot in accounting and finance. That net income for the month, that net profit for the month. Learning to read that and understanding that is a critical skill for managing your business going forward. As we have talked about, for creatives, independent contractors, various kinds of entrepreneurs, their expertise, 99% of the time, is not going to be finance and accounting, right? It's going to be social media or some other field where they're competent at it and they're trying to run a business at it. You have to become competent at some of this, as much of a pain in the neck as it is. And if you can't become competent, then, as you said, being connected directly to an accountant with your expense reports and the like, it would really be very, very helpful, because now you have a third party who can give you advice, who can explain to you what's happening if you are struggling with profit and loss statements and reports of these various kinds.
This is a question that I think people listening could have. What if they feel like they're not making that much money yet? Like, how important is it to have the expert on your side? Because I could see a lot of people waiting to find the expert until they're making X amount of money. But would you argue that this expense for your business is crucial for the financial health and like longevity of your business? What are your thoughts on that?
Well, I don't know that I can say it's crucial. Crucial means you can't live without it, right? I think it's important. I think it's extremely helpful, in particular, if someone has no aptitude for this. You know, like if this whole conversation is just blowing your mind, right? You're going like, what? If that's what's happening as you're listening to this, then I almost feel like you would do better to get it earlier, because you need that help. Now, by the way, I mean, does it have to be a paid-for accountant per se? You know, you may have a friend who studied finance in college who could look at the report and tell you what it's saying every month for 10 minutes. You know what I mean? So I'm not sure how you have to do it, but I think that the more uncomfortable you feel with all of this, the more important it is to have help. If everything we're describing, you're kind of buying into and going, yeah, well, of course, that makes sense. Yep. Oh, of course. Yeah. You take your revenue, subtract your expenses, you got your net. If that's the way your mind thinks comfortably, then you'll probably be able to look at your own statements and understand what's going on, what's happening. The statements, by the way, these profit and loss statements, often what you'll do is you'll have two columns. One will be the prior month, the month that just happened, and then another one will be year to date. So now you can see from the beginning of the year how revenues are falling in, what expenses you're having. Does something stand out as being more than you really expected it to be? And then you get into, okay, is there a way for me to reduce that expense? You know, is there something I can do here? Again, financial management is, unfortunately, it's just a part of operating any business. In particular, if you're operating at a loss or just not making as much money as you want to, you need to look at all these things and make sure that you are doing the best that you can in every category.
So true. It's so true. And we'll end on this note. I will just say I never forget someone telling me that the numbers don't lie. They really don't. You know, it's black and white. And I think that's actually very helpful. As an entrepreneur, you're probably quite creative and you have lots of ideas and you love building and growing and creating, but the numbers don't lie. And I think it is something that we just have to learn to embrace, learn about, you know, figure out ourselves or hire out some sort of expertise so that we can keep going and do this thing right. So this is a very good conversation.
Don't be in denial. Look at the numbers and go, it's wrong. It doesn't mean anything. It's all going to change. You have to be sanguine is the word, you know, about what you're seeing and not make any assumptions other than what's on the paper in front of you for financial management purposes. You really do. And that's great advice.
This is an awesome episode. I'm sure we'll have more to come along this topic, especially as we grow, especially as our audience gives us questions and things that they are experiencing. So thank you so much for today's episode. If you can subscribe to the show, follow the show, share this with a friend across social media, we would love for you to do this because everyone truly does need a financial dad. Thanks so much for being here today, everyone.